The Hong Kong market, that's down 240 points. So, over 1% gone over there.
There's still a chance for a soft landing. I mean, I wouldn't take that off the list of possibilities.
For now, 70 points higher. I think the bulls would take that. The Sensex is up about 200 odd points.
Since the middle of December, this market has displayed characteristics of a short-term downtrend. I think there's no running away from that.
Yes, there is no slowdown. What happened during COVID is that we got a large share of the wallet.
Stock will be out of the FNO contract starting May, so only the two next series will be in FNO.
Don't be fooled by the weak headline. The quarterly growth momentum would be very strong in the high double-digit growth.
The Nifty is now down 90 points.
It is basically called Zomato every day, where they will sell and deliver home-style meals at 89 rupees per meal.
The relief is interim in nature. Let's keep in mind that on 22nd of February is when the NCLT had directed for initiation of insolvency proceedings against Z as well as Citi.
The Prime Minister addressed the inaugural session today, and he called on all the G20 leaders to work towards bringing stability in the global economy.
As far as the markets are concerned, at the day's low, it's another weekday in trade. 70 points gone on the Nifty.
Subdued Friday, tough week. Markets have closed lower every single day this week. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay. Hi Surbhi, and we've got Nigel D'Souza as always in the newsroom. For the market, it's 17,450 in the Nifty, down 65 points, but the downward grind, the negative trend which started at the beginning of the trading session has continued. 66 points lower on the Nifty, the Sensex down by 200 points, and now the level to track will be the 200-day moving average in the Nifty, 17,362. We're still about 80-90 points away from that level, but this is going to be a very crucial level for the markets to defend, the 200-day moving average. As I said, every single day the markets have closed lower, and this week the Nifty is likely to go home with a cut of nearly 3%. Mid-caps have fared a tad better. The mid-cap index is down nearly 1.2%. The biggest knock is coming on the metal index, with the metal index down 6.5%, and for the day the metal index is down 2.5%, and PSU banks continue with their downward journey, so the profit taking continues over there. There is no Nifty sectoral index which has managed to clock in gains this week. So it should be tough going, right, for our markets?
Tough going. 7 straight day of declines, Reema, and down about 3% for this week. Like you said, down all 5 days this week as well. I was looking at, anyway, we've been trading below yesterday's low. So I, went back to check the budget day low, and I think that's the next level that a lot of people will look at, just psychologically, sentimentally. And we are basically about 70 points off that. The budget day low was closer to around 17,350, 350.60 if I remember correctly. So we're not too far away from that. And the other thing that's very disheartening today is that we kind of stand out in our underperformance once again. If you look at European markets right now, they are not, running away in a hurry, but there's a fair amount of green out there. There's nothing new on the yield. The US 10-year yield had pulled back overnight yesterday, and it's pretty much stayed there throughout today's session as well. You can see that green on the European screens there. If you're looking at the US 10-year, 3.8, nothing's changed. The dollar, you can argue, the dollar has been fairly buoyant. The dollar index has been trading northwards of 104.5. That's the US yield. So there's not much of a movement out there. So we're basically falling under on our own weight, and perhaps the lack of buying at lower levels. That seems to be the story, and that's why it is a little disconcerting. Nigel, I remember we were in the same mood last Friday. Now that I think of it, and you were telling us, guys, come on, ultimately it is Friday. What to do? I think we're in the pink of health, you and me in our pink colors. Not sure about the market.
Well, that's right. Markets are just red. There'll be no sign of pink. It's only red out there. And, today was a little bit of an uncomfortable scenario, actually, for the bulls, because we started off in the green and it gave a perfect shorting opportunity to the bears. Now, the only glimmer of hope is the points that both of you all were mentioning. The 200 DMA and the budget day is low. That comes in at around 17,350. It's actually in bang on that spot, 17,350, 17,360 odd. So we need to hold on to that level and then hope for a bit of a bounce. But otherwise, the texture of the market has changed from buy on dips to sell on rallies. And just take a look at the call writing that we've seen. 17,700 call, very, very aggressively being written. 17,600 call as well is being written. But the problem is, in the last 60 minutes, the one that's most active is a 17,500 call. And that's being written very, very aggressively, which is telling you that the bears believe now we're not going to see that 17,600, 17,650. That's their zone that they want to defend. If the bulls somehow can get a positive data point, I don't know whether it's the data that's coming out from the US tonight, or maybe in fact you get a cooling off in terms of the dollar index, the yields cool off, something they require, because this market is net short as we speak. So hopefully we don't fall too much from here on. But otherwise, the moving higher from here on, there's no big reason actually that we should be going up. And that is a bit of a problem for equities in the near term itself. Rima?
Fair enough. How should you position yourself in the last hour of trade? Mitesh Thakkar of earningswave.com joins us on the show now. Mitesh, at every instance when the markets were bouncing higher, rebounding from lows, you were never convinced that the markets can substantially move higher. You were always cautious over the last couple of days. From here on, do you think the markets are showing a significant pressure that we could breach the budget day lows, the 200-day moving average? That support might be taken out and we could be headed much lower?
Good afternoon. I think the overall structure has been weak, and that is why, I think the rallies are getting sold into, and that is what we were expecting and hoping. I have been, penciling in targets of the 200-day average, which you just rightly mentioned, which is at about 17,365, 368 zones or thereabouts. And the overall structure does suggest that we might actually, eventually break below that and head towards 17,100 levels as well. So what happens typically is that when the market kind of starts declining, you will get support levels, you'll get bounce back, and then most possibly the market will make a lower high. So I think that sequence of lower highs, lower lows is likely to continue, and therefore in that sense, I'm very clearly bearish. But from a trading point of view, you have to tactically adjust. Every time you're near support levels, you want to cover some shorts, trail your stop losses tighter, wait for a bounce back again, then sell into it. So I think that's the way we are approaching it. It's not a market which is falling one way or directionally, because we did spend a good time between 17,500, which was the last time when we tested. This was around 30th of January. And then a good part of February was spent between 17,500 and 18,100. And then we are back to the same level. So I think good chance that we'll eventually break below that this time, or if not today, I think, maybe we'll get a 1-2 day kind of a bounce back and then eventually continue the downward journey, because the setup still is on the negative side. So maintaining a bearish view on in that sense. In fact, on the stock side as well, I have one buy and one sell. Whirlpool is something, which has come on the buy side, and very surprising actually, because that stock is doing very well in a market which is very weak. So I have a buy here with the stop below 1,300, maybe 1,295, and a target of roughly around 1,400, 1,395 to about 1,400 is what traders can possibly look at. And one sell call, that's on Punjab National Bank. In fact, we've been slightly bearish on the PSU banks for the last few days. So we've had sell calls in Canara Bank and Bank of Baroda. PNB now can be sold with a stop at 49.5 or a target of around 45, maybe 44.5 at the downside.
Thanks, Mitesh. I think you've read my mind. I was just looking at some of these PSU bank charts just a while back. Take your calls on board. We'll come back to you in about half an hour to see, how things shape up. Thank you for the calls. Let's welcome in Prakash Diwan and take that point on PSU banks forward with him. Prakash, good afternoon. Thank you for joining in. I hope you have some Friday feeling, some Friday, cheers. We don't seem to be feeling any of it on the street today, right? Just the way the market is, what can we do? But I was looking at the Nifty, guess which is the second worst performing stock on the Nifty this year, this calendar year? It's actually State Bank of India. So question really is it just correcting a lot of the great performance of 2022, or, should one be rethinking their positioning on a couple of these names? What's your sense?
Good afternoon, Surbhi. So I do understand the market has not only been so range bound, it's getting a bit frustrating because the dips which people thought they could buy into has completely turned 180 degrees, and you're selling on any rally that seemingly is crystallizing. I mean, the rallies evaporate within the first hour of trade, and that's typically when there's not much of a trigger or impulse to buy. There's not much of news flow which is seeming very outrightly positive. As I said earlier, you've got all the events exhausted, and it's now the market's waiting for some flow-driven news flow. FI flows could probably come back and things, and that's one of the reasons why it correlates with why PSU banks are suffering particularly. last quarter, which is the December quarter of 22, we saw this overbought position, consensus build up that banks were the place to go. Everybody wanted to be there. Fund managers came and talked ad nauseum about how, BFSI was so promising. But remember, banking is a very long cycle. I mean, once it turns around, it gives you opportunity to get in. It also it takes time to deliver. And from that growth phase where we started seeing NIM expand, we've certainly catapulted ourselves into a scenario where the cost of funds has gone up. So interestingly, what's happening is that while you are expanding the books, the NIM probably is not going to keep pace with it, right? So there's going to be some sort of a reset. But you know what, SBI, the likes of SBI is down about 15-16% from the start of this year. But then, it has so much of positive going for itself in terms of digitization, in terms of, the book that it's kind of expanding so rapidly. Home loans is contributing such a big thing. I mean, everywhere it kind of scores so well. So I think it's a great opportunity for people who have missed out on buying adequately into their portfolio for some of these banks. But stick to the quality banks. Don't go at the end of the tail where, you start buying a Punjab and Singh or a Bank of Maharashtra or a central bank just because it's kind of, it's kind of come off from its highs. Stick to quality in the PSU, which means essentially just three banks, which is SBI, BOB, Can Bank. Or if you like the private sector banks, I'm sure there is enough revival that's in the offing. HDFC, for me, HDFC Bank seems to be so ripe for a re-rating. I don't know when it starts, but it could happen very soon and it could last for at least 3-4 months. And then that's catch-up trade that HDFC Bank is likely to play. So good stuff. Not to fret too much about where things are. In fact, you're getting a chance to enter if you missed out on that. It's just an overbought to an oversold kind of a territory that we are seeing on the banks.
All right. Hi, Prakash. Good afternoon. Friday or not, but let's talk about a couple of stocks then, and I wanted your view on GNFC. The stock is up close to around 4% in an otherwise weak market. The news that we're getting is that, in fact, some of those larger plants in Europe, maybe their TDI facilities are getting shut down. So the hope is maybe we'll see a bit of a shortage out there. And we had the management of Sheela Foams. They said that prices are up by close to around 30 rupees. Any view on the stock at around 540 rupees odd?
Good afternoon, Nigel. So you got a very good trigger. We just saw this news come through around noonish today, about BASF closing down one of the biggest plants in Ludwigshafen, and that's a permanent closure. There was an anticipation that they would probably curtail production for some time, given gas shortages, power shortages. But now they're talking about actual shutdown, permanent closure, which means there's going to be a significant gap in the market. It contributes, if reports are right, about close to 10% of the global supply. And if GNFC were to kind of step in some of the markets which BASF was strong at, you definitely have a very great visibility. So all that expansion that they have carried out in the last couple of years on the capacities will start kind of paying off. And that was a big worry that the market had, saying when do they start getting the return ratios back in place, given the incremental capacities they have been setting up. But, at 540, it probably is pricing to some extent because the benefits are long-term. The reaction has been short-term. But look at the same thing could happen to a GSFC as well. I keep on bringing this out that while GNFC is a great play on TDI, GSFC also owns part of GNFC and has its own, optionality within caprolactam. So there's so much going for itself, and there could be a closure on caprolactam producers as well sometime very soon in Europe. So when that happens, you'll again see an impulse of a re-rating for GSFC as well. So, I think it's a stronger balance sheet as well, much more stable. But yeah, it's not very, it doesn't give you that high, which GNFC does with this move. So this is a slightly boring stock, but a great business.
Numbers coming in from SpiceJet Q3. While the top line growth is only up 2.3% on a year-on-year basis, at the bottom line, there is a big jump in profitability. So profits have soared from 42 crores in the December quarter of last year to now nearly 110 crores. So that's a big 2.5% increase, 2.5 times increase in the company's profitability. The stock has spiked close to about 7.5%. We know air travel has been very strong in the last couple of months, and Q3 is seasonally a strong quarter. We're also awaiting more details on their fundraise. Remember, there was a board meeting scheduled today where the company had spoken that they will contemplate a capital raise, perhaps even a QIP. So details on that are awaited. Right now, we have the Q3 revenue and the bottom line from SpiceJet, and the stock is currently up close to about 9%. We'll get in some more comments and color from SpiceJet. For now, need to slip into a very short break. We'll continue talking markets, individual stocks. We'll also invite Rajesh Kothari, MD of Alpha Accurate Advisors.
It's holding. There isn't much changing, so not much to report at the headline index level. Let's now then go a little deeper into individual stocks. Beneath the surface, there is some action and there is some green as well. So I'm going to pick out one such name, and that is Electra Green. Let's pull up the stock now. It's seen a 18 to 19% pop today. Pretty significant move. It's a small company. I think we're just on 4,000 crores odd market cap. So why the 18%? Well, because they're getting into a tie-up, a technology tie-up with Reliance for green buses, hydrogen buses. Prakash, just wondering, have you seen this company? Any thoughts?
Oh, yes, of course, Surbhi. I mean, this has been a pioneer in creating, buses on the electric side and making them successfully, get into commercial usage in a lot of the corporation, a lot of the urban centers. But, the last 1 year, the company hasn't been able to do much beyond just, getting into that niche area and trying to establish its credentials. And that's exactly why the stock has actually lost ground on a year-on-year basis. But, this move suddenly probably breathes a very new life into what could potentially be an absolute new area of growth. And then, Reliance actually piloted something similar with Ashok Leyland some time back. And they seem to be very serious in terms of solutions for commercial transport, for public transport services, and that's where Electra could really straddle its strength and experience. So I think it's a great area, but whether the stock needs to go up 18-20% on a single day, I'm not too sure. But the stock does offer you value if some of these vectors start working towards it in its favor, because it has lost some ground from a valuation context. It's definitely much more reasonable than what it used to be during those fancy months. But wait for things to turn out, wait for some pilots to happen, wait for the output. I think that they'll give you adequate time and safety in terms of buying later.
All right, Prakash, before we let you go, I want to ask about the metal stocks. They've lost their shine, actually. The last couple of days, actually, yesterday and today. They're under some pressure. I'm not sure what's worrying them, but just going by the screen, the non-ferrous names are underperforming the ferrous names. So my guess is that the stronger dollar is playing a part out here. And the fear is that the globe is going to slow down, so consumption of metal obviously will slow down. Your view on this space, and do you like anything? Would you look to buy into any of these stocks?
So, yeah, Nigel, you're so right. The global setup, which seemed to be getting in favor of commodities, and that's exactly why you saw copper head up, you saw aluminum go up, basically was predicated on the fact that China reopening is going to spur a lot of demand and trigger a wave of consumption. That's not happening. The US is suffering for its own share of issues. And that's precisely where commodities have started softening and the dollar has started emerging as, it's making a full comeback. And that's the time where you would see all of these Hindalcos and Vedantas and Zincs of the world to start suffering. But, my choice within the domestic metal setup is NMDC. I mean, it's an indirect play on the ore side, but I think it's something which is absolutely at a stage where it could only go up. The way iron ore prices have stabilized and they could only move up as soon as demand starts picking up, as soon as internal consumption starts kind of throwing up some sort of a pricing power back to them. I don't see any reasons by March, by April, why that would happen. And if NMDC was successful in maneuvering its way profitably out of the steel venture, which is now listed, and doesn't get itself embroiled in too much of debt and all that, I think it's going to be a very good optionality. So from the current levels, you'll probably see a 20-25% upside, which is decent enough for a company as large as that. I know people don't get excited about 15-20% these days, but on the metal side, I think that's one of the significant plays that you could play very safely from a risk-reward perspective.
Okay, today NMDC is down on account of going ex-dividend by 3 rupees 75 paise. Another important corporate conversation that we had going through the course of the day was an exclusive with the TTK Prestige chairman, T.T. Jagannathan, who told us that company is closing in on a potential acquisition and the size of that deal could be 500 crore rupees. However, he's also raised a red flag on domestic growth and consumption, saying the rural market has slowed down. This is something that we've heard from so many corporates through the course of the Q3 earnings, but it's been echoed and reiterated by TTK Prestige. Listen in to that chatter about the acquisition and the domestic slowdown.
We are trying to shift volume from domestic to export because domestic is slowing down.
Okay. I want to talk a little bit more about this domestic slowdown, because in the context of you adding capacity in Gujarat, what would this mean? A, what would your total capacity rise to? And once the whole capacity comes on stream, what will that help do to your revenues?
We've added capacity in different areas. We've added capacity in non-stick cookware, in roller coated cookware, in stainless steel cookware, hot anodized cookware, very different businesses we've added capacity. So I can't tell you what percentage, but it'll add about 500 crores to top line if we use it fully.
You said that the entire pressure cooker category has slowed down. And of course, you can't compare it to, the COVID levels, because that was a different consumer pattern. But now that, COVID is behind us, do you think the slowdown is temporary, or do you think it could be a little more long drawn?
My view is that it's temporary. You see, the rural market penetration is almost zero. And with induction and gas going to the rural market, they'll have to start buying pressure cookers. I believe it's a huge growth story in pressure cookers.
Mr. Jagannathan, you've been in the market at times. You've said that maybe inorganic growth is something that you could look at. Are you scouting for something as of now? Should we hear something?
Well, I'm afraid I can't talk about it at all.
But are you on the, we don't want a timeline, but are you still on the prowl?
We're on the prowl, yes. In fact, we're almost nearing destination.
Sorry, we are almost?
Nearing destination.
Oh, wow. That'll be interesting. Okay, so then let's push it a little bit more. By the first quarter...
No. No more.
Okay, what could be the rough size, Mr. Jagannathan? What could be the rough size?
What could be the?
Rough size. The destination, what could the size be? 500 crores, 200 crores, 300 crores, what could it be?
About 500 crores.
About 500 crores. And the cash in your books is?
850 crores.
All right, so you could fund it from that. Interesting.
And are you looking at this calendar year itself?
We're low hoping for that, yes.
Prakash, this kitchen appliances space has seen a lot of acquisitions in the last couple of quarters. There was Crompton, Butterfly, then V-Guard had gone ahead and made that big acquisition of Sunflame. And now you've got TTK Prestige closing in, nearing the destination on a 500 crore acquisition. Thoughts on how this entire space is shaping up? Of course, there is a slowdown which is hurting everybody, but slowdown could be a temporary phenomena, perhaps for the next 12 months, 18 months. What about the long-term picture for kitchen appliances, especially since some of these big players have only gotten bigger post the recent M&A actions?
Oh, absolutely, Rima. I think that's a very wonderful point you touched, because this is a space that's offering a huge opportunity, not in terms of just organic growth, but this consolidation wave that we have seen. The reason is very simple. Every company that has built itself into a brand can leverage on different SKUs at different price points and just expand the product offering. Because unless they do that, unless they can reach out to consumers, utility segments at all points in time and all phases of growth, there's no way you can survive. I mean, you need to get that economies of scale. You need to get that distribution efficiency in your supply chain. And that's precisely why most of them have done well after acquisition. One company I can leave you with, and then we can talk about this at some later stage in detail, is a company called Stovecraft. Now they came up with an IPO, didn't really kind of get celebrated as much. Stovecraft has actually been a bit of a sideways, lackluster kind of a mover on the markets. But I can tell you, apart from the fact that metal prices last year impaired their margin profile, there has been really not much that has damaged the business. And on the ground, if you look at Stovecraft, it's doing exceedingly well in terms of the penetration in tier 2 cities, the kind of offline presence that they have started creating for themselves via EBOs and all, and a great product range. I mean, they are known more from the Pigeon brand of sorts, and they also have some very high-end products which they've added into their portfolio. So I think it's a company in the throes of transition to a very market-friendly kind of a business model. But it's a great space, and I think one of the best companies right now with a strong balance sheet is Stoker, and it's available at far lower valuations than what it used to be just about a year back.
Okay, all right. Thanks a lot, Prakash. We'll have to thank you on that note. Wishing you a good evening and a good weekend as well ahead. Thanks so much for joining in and discussing a whole host of stocks. But time to get in to our special guest. We have Rajesh Kothari, Managing Director of Accurate Advisors, who joins in. Hi, Rajesh. First of all, congratulations. I believe that y'all, the PMS that y'all run, y'all won a couple of awards, and y'all have relatively outperformed the market returns. So good on y'all in the last 1 year or so as well. I believe that though the markets are flattish or with a bit of negative bias, you'll have still given mid-single digit returns. But Rajesh, what do you do from here? The markets are looking a little bit brittle. Some concerns have come back on the table. How would you approach the markets? And the other big talking factor is earnings are dwindling down now. We're not getting that kind of growth that we anticipated. Your comment on that?
So first of all, thank you, Nigel, for your wishes. And from market perspective, I think that's what the common feeling I get when I interact with partners, distributors, and common men on the street. But let me put a different perspective to it. If I had told you in month of January 2020, pre-COVID, that how much you think market will deliver in 3 years, subject to one, there will be pandemic crisis, and second, there will be Russia-Ukraine war. You would have said, forget equity, let me put into a fixed deposit. But today, when you look back, from Jan 19, pre-COVID I'm talking about, to Jan 2022, 3 years, Nifty has delivered decent 12% compounded returns, despite taking these two big hits. Now, do you think the next 3 years will be equally painful like last 3 years? I don't think so. And therefore, I won't be surprised if market continues to deliver good double-digit returns over next 3 years. Please remember that uncertainties creates opportunities. It is only those who invested during those crises, they not only made probably 12%, they actually made even more, maybe 18%, maybe 20%. So I think it is a good time. There is a decent time correction. There is a decent price correction, and earnings have done reasonably well. So I am reasonably positive on market. In fact, I would say take any opportunity of take correction as an opportunity to further add to equity class. I think from here on, we are going to see probably another 2-3 months of this, a little bit of noise from the global market. But after that, probably most of the things are going to favor you.
Rajesh, hi, good afternoon. I get that. Good to hear your sense of optimism. I guess just for investors, it gets, it's really tests your patience, because the last 12 months, 2022 was pretty much spent in a wait and watch mode and dealing with a lot of headwinds. And 23 hasn't turned out to be any different, at least till now. Okay, so let's talk about what you would be buying. If you look at some of the portfolio sort of composition here, you've got banks, financials, you've got some software, over there. But tell us, let's say for every incremental 100 rupees that someone has to invest, looking at the environment around and taking at least a midterm, medium-term view, if not long-term, where would that money go? Or where should that money go, rather?
Well, I think from last, almost 18 months, we have been very bullish on capital goods as a theme. And if you look at our portfolio composition, sectoral allocation, it remains one of the top allocator is, CapEx play. So clearly, we are bullish on overall CapEx as a theme. So that's the first thing. Of course, I also believe that unlike last 2-3 years, where the poor quality stocks have done extremely well, this year we are going to see reversal of it. Now from here on, there will be difference between good and bad. So it is going to be more bottom-up approach rather than top-down approach. On top-down basis, capital goods, banking, and consumer, these are the three sectors which we continue to like. But then, of course, you need to go, really fine-tuning the companies and identifying the businesses which you think will not only grow, but has a less of balance sheet issues, very strong governance, and of course, ability to reinvest for the growth, and therefore strong cash flows. I think that will decide probably 2023. You will see a lot of alpha generation opportunities compared to last 2 years where, throw the dart, make the money, that 2021 period. Luckily, fortunately, that period is gone, which is the good news. And I think the sanity will now prevail.
Muthoot Finance is a stock that you've bet on. It's a part of your core portfolio. It makes it to the top 10 list of stocks. Generally, for gold, gold loan companies, the AUM growth has been fairly muted and it's been moderating in this quarter. And not just for companies like Manappuram or Muthoot, but even for banks, the gold loan growth has been moderate. Your thoughts on the space in particular, and from here on, what are the big triggers for a company like Muthoot Finance?
Well, this is a company. This is the name what we own in our AAA Budding Beast, which is a mid and small cap, PMS, on the table. And Muthoot Finance, if you look at the entire gold finance, as you rightly mentioned, not only last quarter, I would say last 4 to 6 quarters were a painful quarters. And therefore, from now on, we are getting incrementally positive. It is a name which we added in recent times. And I think from here, as the company got more licenses to open the branch, if you look at the NIM pressure, probably the last of the quarter of that pain. If you look at the slowdown in growth, that is also probably last of the quarters. So I think if you again have from here, if you look at next 6 quarters, valuations are quite reasonable. It is one of the best play in gold finance. It's a top company within gold finance as a space. Best of the management, pristine asset quality, great business practices. And remember, this sector has always seen intense competition. Wherever the sector does well, everybody wants to do this business. And then everybody make losses and they go out from the business. Whereas Muthoot, and that's a moat of Muthoot, they know what are the right borrower profile, the risk profile, and the lending practice as per the requirement to make that continuous ROE and ROC. That's what makes Muthoot compared to significantly different compared to many other players. And the valuations are now at a very, very attractive levels, and the margin of safety right now is in your favor.
Okay, all right, Rajesh, we will discuss real estate in just a bit, but I'm observing you have a couple of cables and wire players. You have Polycab as well as Finolex Cables. Is that the indirect way you're playing the theme?
Yeah, I think the building material is one space which we have been bullish on, and there are many companies within building material. All are debt-free balance sheet, all are cash rich, all are large players. They are all our top 3 players in the industry, and they of course they are great of the ROEs. Now, what is happening in this space is the demand growth because of the both government side capex, the private sector side capex, and also the residential real estate boom. All these 3 things will add to the demand growth for the sector. The sector has seen the headwinds in terms of the high raw material cost, particularly during 2022, the first 3 quarters. From now on, that is not going to happen. So that headwind is now gone. So I think you are going to see a very strong, I would say, EBITDA growth. And many of these companies, the 2 companies which you have talked about, particularly, say, for example, Polycab, they are also entering aggressively into FMEG segment. So it is what Havells did in 5 years, Polycab did in 3 years. And that's where makes a difference. Leveraging your existing distribution network, leveraging your brand, and these 2 things combined and enter into that consumer FMEG space, and that will also grow over a period of time. So I think we are reasonably bullish on both these companies, and Polycab has been our holding since last almost 3.5, 4 years. It has been good performance for us, and we continue to like this name.
Got that, Rajesh. Good chatting with you as always. Thank you very much for making time and stopping by today. You have a great weekend, and we will look forward to our next conversation. Well, back to the screen. Still down about 40, 43 odd points on the Nifty. Bank Nifty is down about 0.2%. What's really catching the eye is the heavy duty selling that's happening in a lot of the metal stocks today. Hindalco, for instance, is now pushing a cut of 5%. It's quite a steep cut there. JSW Steel, Tata Steel, they're all down. In fact, even for the year, the metal index, Nifty Metal, is down about 18%. Some of these, actually, JSW and Hindalco have had a rough start to the year. These stocks are down in double digits for CY calendar year 2023. Nigel, I'm just wondering, just tossing this to you, I don't know if there is any fresh news. I mean, is there a trigger, or is this the market seems to be just falling under its own weight, and maybe the metal stocks are just some favorite whipping boys today?
Surbhi, I think you have to track it for a little longer period. because the data point that you said was that we're down 18%, right, for this year, or 15%, whatever that number was. But if you track it from November, we're as flat as can be. And in fact, the problem was that we had a big run. If I look at the metal index, it was at around 5,500 odd, October itself, when the China reopen trade was playing out. And then it had a big rally. It had close to around a 25% rally till around, even if you look at it as late as January, it was up close to 25%. The index itself was close to around 7,000 odd. So I think it's reversing back to mean. A couple of factors that could be playing out is, everyone's talking about this slowdown, this global slowdown. If that plays out, then obviously metal consumption goes down, point number one. Point number two is, particularly if I'm seeing the non-ferrous players today, they're underperforming. So the guess is that the dollar index is stronger, right? If dollar index moves inversely to the LME prices, and LME prices will see some bit of pressure. China, remember, the reopening has taken place. We've seen a bit of a jump up from there. And the hope is that there'll be shortage, in the global markets. But if consumption itself goes down, then it puts all of that on the back burner, and you'll only be focusing on the dollar, and you'll be focusing on consumption. And as of now, just for the last few days, that's working against us. So that's why I guess some of these stocks have come off the top.
Sure, so whole slowdown worries hitting large parts of the market, including, of course, the metal space. Let's take a break on that note. As we take the break, here's the latest from the corporate world. EY honored the best business leaders at their annual Entrepreneur of the Year Awards. JSW Group Sajjan Jindal was named the EY Entrepreneur of the Year. Here are some visuals from that event.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, we are almost at the end of markets for the week, but good time to get in. Nimesh, tell us what's the buzz you're picking up on D Street in terms of chatter?
Well, again, at day's low, pretty much, that's been the trend for the whole of this week, and that's been the trend today as well. Again, the big drag has come from the financial sector and from the metals names. Metals, of course, you've been saying it's largely profit booking after the big run-up, so that explains the move in the metal names. But again, from a flow point of view, the consistent feedback has been that there's no big selling from the larger FIs. That's shown in the number as well whole of this week. Even that's the case today as well. So in fact, there's going to be a small market at close buying flow at a leading FI desk, largely in the Nifty names. That's the overall feedback. The other interesting thing is that broader markets have slightly been better performing in the last 2 days. Even in today's trade, while the Nifty is down 70-80 points, the broader markets are relatively outperforming, and some stocks have really done good today. So there is a bit of momentum now back in the broader markets, and I think that's also because some bit of margin pressure is eased out, which I highlighted yesterday as well. Technically, we are below the cruise support level, so the next level on the Nifty, what analysts are talking about is 17,200. So that's something to watch out for from a technical point of view. Both Nifty and Bank Nifty are technically on the weaker side, but largely the flows are not very negative. That's the overall feedback, and for a change, there is a bit of outperformance in the broader markets today.
Okay, all right. Since we're talking about the broader markets, let's focus on a couple of names. What are you picking up on select names?
Okay, so in terms of individual stocks, the first stock on my list today is Indus Tower. That stock is under pressure today, and the anticipation is there's going to be a large block in Indus Tower very soon. So that's something to track in that stock. The second stock is Indiabulls Real Estate. After a very long time, some bit of up move in that stock. The stock is up 10% last when I checked, on good volumes as well. Interestingly, in Indiabulls Real Estate, what I understand, there's going to be a big change in the constitution of the board, which is likely to come very soon. So maybe that's the reason why the stock is a bit excited in today's trade. So that's the second one. The third stock is Birlasoft. That stock within the IT name has relatively underperformed, largely because there is a large selling coming in, and looks like that seems to be largely getting over. In fact, one of the domestic PMS was an active seller, and maybe today is the last lot which they have sold, and hence that is one stock to track. And the last stock is HDFC AMC. Yesterday in the last 30-40 minutes, there was a huge chatter of a large block deal coming in HDFC AMC very soon. Technically now, I guess the block can come. So maybe next week, that is again one stock to track, wherein a large block will happen, and most likely will happen in a block window.
All right, Nimesh, tell us a little bit more about that. Because yesterday there was plenty of chatter, but you said no, that's not possible. But now it could be a possibility. So give us a quick backgrounder, and why is it now a possibility?
Okay, so in terms of background, Nigel, Aberdeen is what we all understand, that they are looking to sell 10.2%. out of which they are willing to sell 9.9% to a single buyer. That's an official disclosure. Now, as per the SEBI norms, for an AMC, when there is a change in the ownership, you have to give an exit option to the unit holders without an exit fee. Now, that window of 15 days gets over today. Okay. After this, my sense is Aberdeen can go ahead and sell that 9.9% to a single buyer. Because this is a single buyer, most likely the deal will happen in the block window. That's the another feedback that I've picked up from the dealing room. So that's something to track as far as the block is concerned. The other interesting angle is once the block gets done, the free float will go up because Aberdeen was classified as a promoter, and that will not be the case further. So there is a very high chance that once the block is done with, you will see the stock getting added back to the MSCI. Remember, in March 2022, the stock was deleted from MSCI. Once this block happens, there is a very high chance that it will get added back to the MSCI. So that again will be a trigger to watch. But my sense is now that the 15-day window is over, the block can technically happen anytime next week.
All right. Okay, got that. We'll watch out for this one, Nimesh. Thanks as always. Those are, of course, some of the interesting stocks that he's picking up in terms of news flow and chatter on the street. Let's take it back to Mitesh to get final ideas before we start winding down for the day. Mitesh, not much has changed. I guess the bias is still negative. What are the calls now that you would consider for Monday?
Yeah. So, as a series of BTST calls, I have in fact 2 buy calls given the fact that we've been broadly having more of short positions. So just balancing it out because there's a weekend and there's a gap of 2 days before we resume trading again. So Dixon is something which is reversed very nicely from oversold levels. That's a BTST with a stop at 27.75. Look at targets of 28.30, 28.40 on the upside. And the other one which I like is Apollo Hospital. Yesterday it made a candle with a big shadow on the downside. Today I think it's repeating the same thing, and today I think there's a hammer formation. Typically a bearish setup, and given the fact that it's trading around support levels, good chance that Monday should see this stock trading positive. So Apollo Hospital is a BTST with a stop at 44.59 and a target of 45.10.
Thank you very much for that. Let's talk a bit about macro tech developers. The stock is showing tremendous price and volume action. The stock is down 10% in today's trade. It's a fresh 52-week low. But look at the kind of volumes it's seen on the way down. Volumes today are 6.5 times its 10-day average volumes. So the price damage has happened on very large volumes. Sonal is here with some more color. Sonal?
Thank you so much for that. Well, there's no specific news, so to say, or anything that the company has reported to the exchanges. But yes, it is a big fall that we're seeing on macro tech developers at a 52-week low today. In fact, the stock is down 30% this month itself. And this week itself, it has seen a price correction of close to 20%. Now, remember, last month itself, the company raised around 3,600 crore rupees. This was via QIP. That was an offer for sale to bring the promoter stake down. And that price was 1,026 rupees per share. So this current price is way below the QIP price at which this money was raised. Now, there is no supply overhang, so to say, because the promoter stake has come to 75% as per the SEBI rules. So that is not the reason why this is seeing such a big fall right now. Quarter 3 update was also very strong. So fundamentally also there is no hiccup as far as the company is concerned. Pre-sales grew YOY, a quarter-on-quarter basis, collections were higher, and net debt also reduced for the company on a YOY basis. Now that is something we are seeing across the realty index. It is down 5% this week, 11% so far this year. The CPI print that came in higher than expected this month is something that had been leading to declines all across the realty index as well. So week to date, we have seen Prestige Estates declining by 8%, Godrej Properties down 7%, Brigade down 5%, DLF also down 5%. So the next thing to watch out for will be the monthly registrations for the MMR region for the month of February. That saw a decline of around 5 to 6% in the month of January, and Lodha is primarily in this region itself. So if there is a further decline, that is something that could talk about demand trends in this region, and that is something we'll be tracking closely.
Okay, all right. Thanks a lot for that. So now, well, Siddharth Bambre joins us to give us his take on the markets, as well as I believe he's going to tell us about stocks that could relatively outperform in the current environment. Hi, Sid. Always good speaking to you. Well, I wanted to know about those themes that could relatively outperform since the markets are a little bit jittery. Would real estate stocks come in that pack, or are there some other stocks? If yes, then give us the list.
Yeah, hi. Good afternoon, Nigel. So before I touch upon stocks, let's understand the fact that money flows where it can make decent risk-adjusted return, and that's the reason our markets are underperforming. And when I say our markets, I'm talking about equity at large globally, and because debt is looking more attractive. If you remember, last time when I was on your show, which was at the beginning of earning season, which I mentioned clearly that we will continue to buy which is doing good rather than which has become attractive because of correction. And those themes are playing out. And there is no meaningful change from those themes. So firstly, to answer to you about real estate, I think real estate companies, though, on ground, we are seeing that real estate prices are pretty firm and there's good amount of sales. But then the input cost pressure on these companies has been higher. And that's the reason we are not seeing any prolonged sustainable up moves. And one slightest news, negative news, is seeing that real estate stocks are correcting. We are not officially tracking these names very closely, but we won't be buyers over here. What are we buying? See, it is very important to understand, Nigel, that banking is underperforming, and banks and financials carry a lot of weightage in our index. And we are seeing, a lot of people talking about slowdown overall. If you see economists, they are talking about slowdown in rural. Experts are talking slowdown in mobile penetration. Then, you have analysts who are talking slowdown of, men's undergarment, and management of TTK Prestige mentioned about slowdown in pressure cooker. So from where this GDP growth is coming of 6.4%, I think it is infrastructure space which is seeing a lot of growth. And even if you look at stocks in infra space, they have outperformed. So first and foremost, we are quite optimistic on cement space. And within cement basket, if you look at the large cap names, you will have to remove ACC and Ambuja from the equation because of the obvious reason. So you have very limited choices left. And out of those choices, we have Ultratech Cement as our top pick. And we are also liking Dalmia Bharat in the same space. Mind you, these stocks within this correction of Nifty from 18,500 to 17,500 have not corrected and in fact gone up in last 1.5 months. And we believe they might continue to do well, not because just the theme is good, but even valuations are supportive. They're still not expensive. In fact, they are trading at their median valuations when you see EV to EBITDA per se. So that is one space which we are liking. We are also liking IT. Within IT space, it is Infosys and SCL Tech among large cap space we are liking. There are multiple themes which I can talk about.
Okay, so those were some themes. Cement, capital goods doing well. Look at the way some of these stocks are spiking up now. Mahindra CIE, they had a conference call yesterday, very confident about growing faster than the industry because many of their clients are doing well. Mahindra CIE is now up 17%. Biocon is another one. Pull that intraday chart and you would see the stock has seen a spike in the last few minutes. Indiabulls Real Estate, 14% gain on Indiabulls Real Estate, and PB Fintech, that's another one, which has gained close to about 11 to 12% on very large volumes. So activity is picking up, right?
Yeah, at least at the individual stock level, there is, some move out there. We do have to take a very, very quick break on that note. We'll come back in just a moment with the close.
Welcome back. Just 1 minute left for markets to close, and it's going to be another down day for our markets, but we're off from the session lows. The markets would have ended in the red for the sixth consecutive session, which means every single day this week. And for the week, we're down 2.6%, with the biggest cut coming through in the metal names. The Nifty Metal Index down 3% for the day and 6.2% for the week. Running you through some of the big drags today: Hindalco, JSW Steel, Tata Steel. These three stocks were under pressure. Adani Enterprises lost nearly 5.2% in trade. M&M gave up ground. HDFC Bank was subdued. Along with that, other financials like Eicher Motors, SBI Life, HDFC Limited, and Larsen & Toubro had a 1% cut by the end of trade. On the flip side, Adani Ports saw buying in the last 1 hour of trade, and it's likely to go home as the top Nifty gainer, 1.5% rally on that. And you also had green on the screen when it comes to Asian Paints, Divi's Laboratory, Coal India, Dr. Reddy's, Bajaj Finserv, Reliance Industries. All in all, another subdued session, wrapping up a tough and a weak week for our markets.
Absolutely, Reema. I mean, at the individual stock level, there's more action, and some of it is actually quite on the optimistic side of things. I'll just pick out some of those names. Mahindra CIE, for instance, is going home with a gain of about 15-16%. SpiceJet is up about 13%. TTK Prestige going home with a gain of about 2% as well. So those are some of the movers and shakers on the upside. Of course, Z has continued to be in focus throughout the last couple of days, with the relief coming in from the NCLT. Stocks finally ending on a pretty flat note. So individual movers and shakers, yes, but at an overall market-wide level, fairly downbeat sentiment as we have been in consecutive decline every single day of the week. Well, with that, it's curtains on this edition of Closing Bell. Thank you very much for watching. We hope you have a great evening and, of course, a great weekend. But don't go anywhere, because there's lots more coming up, starting with our Friday special, Smart Money. Sonia taking it up on the other side.
Powered by LIC, हर पल आपके